Well, Mark Faber is the editor and publisher of the Gloom, Boom, and Doom Report. He is our guest host today. Mark, we've got just a few minutes to get your call on quite a few issues, so let's quickly go through them. Your take on gold.
Well, I think since Mr. Bernanke was elected Fed chairman, the price of gold has more than doubled, and Mr. Bernanke is the gold buyer's best friend. That doesn't mean that gold cannot go down. I'd like to stress that the Fed is pumping money into the system and other central banks will do the same. But the private sector is tightening credit conditions, and as a result of that we have a relative illiquidity in the world that, in my opinion, will affect all asset markets, whether it's the art market or the commodity markets or the real estate markets or the financial markets. And so if you ask me, I'm basically near-term bearish about everything.
So what does that mean? That we should cash out and just put our money in deposit?
No, the problem is that paper money is even worse than gold. But the gold price can correct on the downside. I mean, I'm telling people the same. Everything you touch today, you have to be prepared that you can have a movement of 20% against your expectations. It could be 40%. The oil prices, say, at 105, could drop to 80 before it goes to 300. Everything can happen. We have very high volatility. In high volatility periods, most investors will be caught somewhere, like Bear Stearns. They also got caught somewhere.
Oh, okay, let me approach this from a different angle. Where are you putting your money?
Well, I wished I knew. I'm diversified. I have different currencies, and my biggest position is basically gold. It doesn't mean that gold cannot go down. I'm prepared to ride out a decline in gold prices. But when I look at Mr. Paulson in the United States, when I look at Mr. Bernanke, I'm telling you the gold price will appreciate against dollars in the long run, and the dollar will lose its value against pretty much everything in the world.
Okay, I'm looking at your report. You also like tobacco, beverages, food retailers, electric utility, and silver as well as gold.
Well, basically you have to own what are consumer non-discretionary. In other words, what people need to live. They need energy and they need food. So before you had the interview with the CEO of Sime Darby, I mean, that's, in my opinion, a good play on the world at the present time, relatively defensive. Doesn't mean that the stock can't go down. It's a question of valuation. In an environment of deleveraging, you don't know how far the deleveraging will go. And I'm bearish about everything. But buying opportunities will arise one day. I just think that now, with the lack of visibility and transparency, I have no idea whether Goldman Sachs is worth $250 a share or $10 a share. I have no idea. You don't know either. And the rating agencies know the least about that.
Mark, thank you so much for joining us today. It's always great to have you on the program.